Hello Premium Hunters, and welcome to another episode of my weekly portfolio performance update. It's a new week, week 7, February 10th through 14th, and it's time for another update. My name is Andrew and I'm here to give you better options. And I've been trading options for over 25 years, and I'm consistently averaging well over $5,000 per week with my options trading. And this is where I just pull back the curtain to show you exactly what I do and exactly how I do it. I post these update videos each week, typically on Mondays for the previous week. So if you are interested in following me on my trading journey, be sure to like, subscribe, and hit that bell notification. Just a quick disclaimer before we get into the video. I am not a licensed financial advisor. The information provided on this YouTube channel is for educational purposes only and should not be considered financial advice. Please consult with a qualified financial advisor before making any investment decisions. So you may wonder, why am I doing this? Well, I do want to be clear about that first. If you're new to options trading, and you want to know if it's legit, well, I'm giving you the ability to see real results from a real trader. I'm documenting these trades in real time so that you can see that they are indeed legit. And second, my goal is to build a community around options trading. I want to hear from people who are interested in options trading. Anyone from newbies to someone who has been trading for decades and is an expert, a pro, and knows exactly what you're doing. I'd love to hear from you. Options trading is very complex. There's so many different strategies, there's so many different perspectives, and I think we can learn from each other by building that community. So just to give you what to expect in this video, the first thing I'll do in today's video is I'll go through each one of the trades that I closed for the week, and I'll pull up the stock chart for that security that I traded with my annotations to help illustrate the strategy that I used. And then I'll give a basic overview of the strategy and show you how it performed, including the profit and loss that I took from the trade. From there, I'll tally up each trade for the week to show you my total profit and loss for the week, and then I'll compare this week's performance to previous weeks to see how it stacked up. And finally, I will share any insights I've gained from this analysis. So if you are new to options trading, I encourage you to watch my Options Demystified video where I cover the basics of options. This will give you a good foundational understanding for what I'm about to cover in this video. You can find the link in the description or click on the screen to link to it immediately. All right, before I get into this week's analysis, let's just recap what I've done for the year so far. This table is documenting my performance for each week. You can see on this table the results from week 1 through week 6, which was a total of $32,791. which works out to be an average of $5,465. So how did I do this week? How does it compare? Stick around and find out. So closed trades for this week, week 7, total of 8 trades that I closed, and we'll go through them one by one. First one is ES. ES is the ticker symbol. It's actually /ES. That's the ticker symbol for the SPY futures. And what I trade on the SPY futures are strangles, which is essentially a short call and a short put. As long as the price of the underlying stays within the short call and the short put, I will make money. So just to give you a quick overview of what we're looking at with my annotations here, the lines represent the options trades, or actually the strike price for the option trade. So this green line is a call at a strike price of $6,625. The clock indicates when the option expires. There's an arrow at the end of the line indicating that the expiration date is actually off the chart. It's not visible on the chart. The green line indicates a trade that has closed. A yellow line indicates a trade that is open. So as you can see here, this trade, which is the 66.25 call and the 45.50 put, was opened on January 22nd, and it was closed on February 13th, where I made a profit of $1,308. Immediately after I closed this trade, you can see here I opened another one. The beginning of the line is when the trade was opened, and I sold a call for $6,700 and a put for $5,275, and that trade is currently open. It expires on May 16th. And then there's one more trade on this chart, which is a strangle that was opened on January 27th. It's a 6,600 call and a 5,175 put. It expires on April 17th. It is still open and it should be closing here pretty soon. I think it'll probably close next week or maybe the following week. All right, so that's it for ES. Let's move on to the next one. All right, so now we're looking at Palantir, which is the cash cow. It's been the cash cow for me for the last couple of weeks. And there's a lot going on right here, but I'll go through and explain each trade. The WW stands for a weekly wheel. It is a variant of the Wheel of Fortune strategy, and if you want more information about the Wheel of Fortune strategy, I do have a video explaining how that strategy works, and you can find a link to that in the description below. But to give you a quick summary, all I do is I sell a put, and if the put stays out of the money and reaches a 50% profit, I close out, take my profit, open another put, and I keep doing that over and over again. If the put goes in the money, forcing me to buy the stock at expiration, no worries. I buy the stock and then I turn around and sell calls on the stock that I own. And if the calls stay out of the money, I collect 50% profit, close it, sell another call, keep doing that over and over again until my call goes into money, at which point I will be forced to sell the stock, which is totally fine. At that point, I will just sell puts over and over again. So let's see how I did with Palantir with the weekly wheel trade. As you can see, last week, I sold a put at a $111 strike price. The stock went well above that and then came back down to the strike price, but then bounced off of that and went back up again, at which point it was Monday of this week, I was able to sell for the 50% profit of $485.20. I turned around, like I said, sell another put at a $113 strike price. The stock stayed above that strike price, actually came pretty far below the strike price, but not for long at all. As you can see, it rallied back up. This was at the opening of the 12th and went far enough for me to be able to close out for another 50% profit of $335.20. Again, turned around, sold another put for a $115 strike price. This stayed above the strike price, stayed out of the money, and rallied up to around the 120, close to 120, maybe, yeah, it hit $120 per share. Well out of the money for me, where I was able to close for a $545.20 profit. I sold a put for a $117 strike price, which is still open, and we'll see how that does next week. But this week I also traded another strategy on Palantir. I like the stock so much that I actually want to own it. And because of what's going on with Elon Musk and all the political stuff that's going on, I am not comfortable owning the amount of Tesla stock that I own, so I actually sold some of it off. I never thought I would do that. I explained why I did that in another video on my channel, so check that out, link in the description below. But I decided, I still do have some Tesla stock, but I decided to sell the bulk of it and pick some other stocks, because Tesla, although I think it is still a great company, and I still think they have some great products, and I still think they have a huge opportunity, there's always a risk to reward ratio, and right now the risk is out of whack to the reward. I think the reward can be huge, but I also feel like the risk right now is huge, and I'm just not comfortable owning it. So Palantir was one of the stocks that I identified as being an alternative to Tesla that I'd like to own. And there is another video on my channel about how to buy stocks at a discount. It's in the description below, but I am using that strategy right now to buy Palantir at a discount. Essentially what I am doing is I am selling puts, out of the money puts. So when Palantir was trading at about $112, $113 per share, I sold a $110 put. I sold 20 contracts, and as you can see from there, the stock went up, and the very next day I was able to close that put with a 50% profit that amounted to $3,884.64. It's not annotated on the chart right now, but I did sell another put, and I am going to continue doing that until the stock goes in the money, at which point I have bought the stock at a discount, which would be whatever the strike price is at that particular time, minus all the credit I received. Assuming Palantir doesn't completely crash, that would put me in a good position of owning Palantir at a cost basis below, well below, the current trading price of the company. All right, so let's go ahead and move on to the next stock, which is Google. And this is one of my favorites just because this perfectly illustrates what will happen during the weekly wheel trade when your option goes in the money. And so this put, the 187.50 put, was sold on the 6th. And at the time I sold it, you can see the option was out of the money, but then the stock dropped. The option went in the money. The stock rallied a little bit and popped out of the money just slightly, but then started going back down, went back in the money, and remained there for the rest of the life cycle of the options contract, which you can see here at expiration, was in the money when the option expired. Now, one thing to realize here is the stock is in the money during this time frame. My trading platform is showing a loss, and it at times can be a very significant loss, and that can be very unnerving to novice options traders. It's never fun to see negative numbers on your trading platform, but it's not a big deal. As long as this stock is trading somewhat fairly close to the strike price of the option, then it's not a big deal at all. So then what happens at expiration when the option is in the money? Well, I have to buy at the strike price. The strike price at 187.50. The stock was trading right around 185. So I had to pay $2.50 more for this stock than had I just bought it outright. But for me, not a care in the world. And the reason why is because, as you can see here, so this red line indicates when it goes from green to red. You can see the clock there, which indicates that the option expired. Because the option was in the money, the option was exercised, which means I was forced to buy 600 shares because I had 6 option contracts at that time at the price of 187.50. That's the date that the option was exercised, and I had to buy the shares. But my cost basis was 171.92. Because if you take the price that I paid for the shares, the 187.50, and then subtracted all of the premium that I collected while I was selling puts, and you can see that on the screen right now. This is all of the premium that I collected. I got my assigned price right here. This is what I paid for the stock, and this is what I collected in premium over all of this time, carried forward to another column, showing my cost basis at 171.92, which is way down here. So the stock would have to drop way down here before it even reaches my cost basis. But now what I get to do is turn around and then sell calls on the stock that I own, which is my next step. And normally, if I see that my option is going to expire in the money and I'm going to have to buy the shares, I'll go ahead and preemptively sell a call in order to get ahead of it. But I didn't do that. But on Monday morning when the market opens, I'll sell a call and then continue collecting premium on this strategy. Now again, you can see another cash secured put here that I sold at 180. This is because of the situation that I explained with Palantir. In addition to Palantir, I'm also willing to own some shares of Google. I think Google is a good, secure company where I don't mind owning some shares of the company. I think that it has a good future moving forward, and I want to buy it at a discount, and that's what this cash secured put is here. I opened this one on the 12th, and it closed the very next day for a $779.61 profit. And then I also opened another one at $182.50, and I will continue collecting premium until the option goes in the money, at which point I'll buy the stock and own it at a discount. All right, let's go ahead and move on to the next stock, which is Amazon. Here's where I sold a weekly wheel put at a $227.50 strike price last week. This week I was able to close that out for a 50% profit of $538.41. And then I opened another weekly wheel put. I sold a put at a $230 strike price, which, as you can see, the stock was out of the money, or the option was out of the money. The stock was above the strike price, but it has slowly come down and gone in the money and is currently in the money. So will I have to buy some Amazon stock next week? We will find out. Again, I've been collecting premium on Amazon for a while, so I'm not worried about it either way. So that's it for all of my trades this week. Let's go ahead and tally them up. I'll explain real quick what we're looking at here. This is the symbol for each trade. This is the strategy, in this case the strangle. This is the profit and loss. This one collected $1,308.04. It was open for 22 days. I had a profit per day of $59.46. The return on capital, basically how much I made compared to how much capital I had to tie up to put on the trade, was 3.92%. And then if you were to annualize that number, that works out to just over 65% annualized return. So let's go through each one of the trades. The next one was Amazon, a weekly wheel where I made $538.41. Palantir weekly wheel where I made $485.20. Another Palantir at $335.20. The Google cash secured put where I made $779.61. The Palantir cash secured put where I made $3,884.64. The weekly wheel Palantir trade where I made $540.20. And then last but not least, the Google weekly wheel where I made $965.19. And so let's go ahead and look at the totals for the week. The average annual return on capital worked out to be just under 178%. The return on capital was 1.41%. The average profit per day was $481.38. The average number of days a trade was open was 5. And drum roll please, the total for the week that I've made for week 7 was $8,841.49. Let's see how that stacks up for my performance so far this year. It is my second best performing week of the year so far. The best performing was the week 5 where I made $10,738. Week 7, I made $8,841, so a very good week overall. My total profit so far this year is $40,632, bringing my average up slightly to $5,805. So that's it for this week's update. Thank you for stopping by and checking it out. And if you have any questions or comments, I would love to hear from you. Please write them in the comments section below. And I'm just getting started on this channel. There's a lot more content to come. So if you like what you see so far, please make sure you like, subscribe, and hit that bell notification so that you can be notified when I upload more content. Take care for now, and I look forward to bringing you more better options in the future. Bye-bye, everybody.